Welcome to today's training where I'm going to go over a couple of things. First, I'm going to go over stability. Stability versus risk. It's important. Why? Because drama is everywhere. And the thing that I don't want is drama in our investments, right? The other day I was driving, some dude got in a car accident in front of me, screwed me up on the way to a meeting. Sharon's always going to that. She has to go meet with clients. She has to go do her stuff, drive over. We got family stuff happening. The other day we were at a football game. My kid broke his collarbone. I got to fly out to Virginia because my son plays for Liberty University. He had a surgery on his arm, and now he has to have another surgery on his arm because they did the surgery wrong. They got to go back in. Drama, dude. But where I don't want drama, because I'm sure you have it too, right? You have drama with your employees. You have drama in your business. You got drama in your own life. Like there's too much happening. What you don't want to have drama in is your investments. Like when you invest money in real estate, that's not where you want it at. But a lot of people make, and you probably do this too, the biggest mistake you're ever going to make as it relates to investing, number one is never investing. This is how people try to avoid drama. You're never going to do that. I mean, that's like saying don't leave your house, right? Or don't have kids. There's going to be something going on. The other thing that you're going to make the biggest mistake in while investing is investing in the wrong, I'll just write it like that, the wrong things, right? And we've done that. You've invested money in the wrong place, wrong thing, but you can avoid that because the goal isn't to have no risk because there's no risk when there's no reward with no risk, right? No risk, no reward. But the problem is most people never invest or they invest in the wrong thing. And if you listen to all the greats out there, you listen to Warren Buffett. Number one rule of his investing thesis, right? We all know this: don't lose money. Number two rule, don't forget rule number one is don't lose money. But the problem most people are going to have, the biggest mistake you're ever going to make is not investing or investing in the wrong thing. And if you just take that one strategy from Warren, what does he always say? Right? You need to, number one, you need to, well, this is the whole thing for me, is you need to be focusing on capital. I just write preserve. Preserve. Preserve capital. Preservation is what you need to be looking at. Let me use my big Sharpie. The big Sharpie is better, right? What do you guys think? Big Sharpie, little Sharpie. Because you can see that, but you can see my scribble scrabble is a lot less. So, but you want to be able to preserve capital. You don't want to lose money, and you will only lose money by one, never investing or investing in the wrong thing. So that said, if you were to stick to the Warren Buffett concept of that, right? Because you talk about stock market, all the different dramas going on. You look at the stock market now, thinking Nvidia went up. The stock market's going crazy with the way that it is, which means it's poised to do what? Come down some, especially with the new president drama. I'm grateful. I'm happy that Donald Trump won because I think we're going to do better as a I was going to say a company, but a country, but and a company as well. Real estate's going to go up, value's going to go up, interest rates going to come down, inflation will continue to go up because let's be real, no one can avoid the fact that they're going to print money. Taxes are going to have to do something. It's going to hammer somebody. But let me get off of that because that's a passionate subject. That's a passionate subject of mine to grow because I think about the economy. I think about business, right? So the way to go ahead and deal with those things, number one, to be able to preserve capital and to do the right thing and invest the right thing so you add stability in your investments, you're going to invest in real assets. Real assets, that's number one. Boom. Number one, invest in something that's real. Take your paper money. Don't trade paper for paper or digits for more digits. Take your money and invest it in bricks and sticks, steel and glass, multifamily property, big commercial business size, real estate. That's real hard assets. Number two, and it needs to already produce money. Already produce income, cash flow. It needs to already produce something. Why? Because you need to have the cash flow and it's already producing income. Then it doesn't matter whether Wall Street goes up or Wall Street goes down. You have some stability. This is what I keep talking to people about. You don't want to take away all the risk, but you want to remove some risk so you can get the reward by doing what? Moving your money out of the banks, out of Wall Street, out of your retirement account that's tied to mutual funds and God knows what else, into real assets that's already producing income, right? Because this is how you gain stability. So, for example, that's why we did Bell Capital. Bell Capital itself, I put Bell Capital together as a vehicle to you can take your money and move it into a real asset where we find the deals, fund the deals, manage the deals, great assets, great locations in something that's cash flowing and doing it with you, right? But here's how that stability could play out, right? So let's because we made an offer on a deal the other day. We'll keep it simple. It was 110. It was 110 was the offer, but let's just use 100 million. So we all came together. We put our money in $40 million. This is the down. So we get $60 million from the bank, $40 million on the debt part. But we believe that the deal is going to be 5% on our money, right? So regardless of what the Wall Street does, 5%, 5% is good. 5% is good on your money. So let's say that money was going to be in there for 10 years. That would be $20 million we would have made just based on this 5%. We would have made 50% of our money back. There's no drama in that. That's stable. This thing will keep kinking out money. People are going to keep paying their rent. People are going to keep doing better. We're going to keep managing the asset for the investors. This will continue to happen regardless of what Wall Street does. And then later, we go to sell. We go sell for another $40 million over what we paid for it. So our $40 million will go from turn to 80 million plus the 20 we got, 100 million bucks. Boom. This is where we'd be. Can you see that? Yeah, you can see that. There's no that's stability in your investments. We already know what's going to happen. We're going to get 5% on our money. We're going to hold it for 10 years, and later when we sell it. Now, naturally, the goal is for it to go up, but let's say it doesn't. There's still stability in there. That's different. You can't say that with Wall Street. You dump your money in Wall Street tonight, and every day, if you're like me, you're going to be looking on your phone. Oh, it went up. Oh, I'm going to sell it. Oh, it went down. I'm going to sell it. And that's drama. That's like going to the store and everybody gets in an accident in front of you, or you go to your office and all your employees are not making phone calls. They're not doing the marketing. They're not closing customers. They're not doing anything. You want to remove that. Now, there's risk, of course. There's risk in everything. There's risk in not doing it too. What did I say? The mistakes you're going to make. Never investing. That's a risk. Investing in the wrong thing. That's the risk. Investing in the right vehicle. And this is the key point to that stability, right? You can get stability, boom, through scale. This is the only way to get the stability. This is the diversification that Warren Buffett talks about. Now, when he talks about, hey, you should diversify, that's not what he does. If you study the top of the food chain, what they say and what they do are two different things. He did not diversify. He went all in on Geico. He went all in on Coke. He went all in on Bank of America, which he just recently sold and moved all of his money, well, not all of his money, but the majority of his money to treasuries, right? Then he cast all that out. Now he's sitting on a big stockpile of, I think, $320 billion cash. Why? Because he knows something's going to happen. You don't pull out that much money or have that much money sitting on the sidelines to not take a big position in something else. You don't diversify. Reason why I say that's important for us is because let's say it's 200 units. This is diversification in real estate. 200 units under one address or one location is diversification. Why? Because if you lose two people, you don't notice, right? Because you have the other people still paying. That's diversification. The problem is when most people are like, I'm going to go get one unit. I'm going to go invest in a house and buy it. Or I'm going to go get 4 units. I'm going to invest in a 4-plex. I'm going to do that. Hell, even a 10 unit. I've done that. Boom. But when I lost a tenant, man, it sucked. Right? When you lose one tenant, you're not, that's 10% down. You're not far away. It's not 5%. You can never lose 5% vacancy in a 10-unit deal. That's not how these things work. Like, that's not real. I mean, let's keep it real. Right? You can have 5% vacant here. You can't have 5% vacant here. It's 90. This 25. That's 100. This is risky. This is what we talked about. So you have to have scale in your investments, which is what we said before. It needs to be something that produces income, right? So you can weather any economic storm, whether it's Wall Street, Bitcoin goes up and down. Grant, the only other thing I could say, yeah, maybe Bitcoin. The problem is you don't get the tax benefits of Bitcoin. You don't get it doesn't produce any income. It doesn't produce any cash flow. All those things come into play in your investments. This is what I like to do. So I don't want the ups and downs in my life. I don't want this. Your investors don't have to do that. They can just do that. It's okay. This is really what you want, right? If you get rid of these, all you have is these, right? And how do you do that? Stability comes in scale. More units, the better. The most important number in real estate is the number of units, period. And also, here's another piece. Why I like this is because if you have scale at one location, you also have control of your investments. These are the only two things that really matter when you're investing. Scale, you have a lot of people paying you a lot of money all at one time, and you also have control. So let's say we get a 200 unit building in one area, then we find another property that's 300 units, and then we find another 200 units. That's 700 units in one location. What can we do now? We can control the flow of rents. We can, if another tenant says, "Hey, I'm going to be moving," we can take them to another property that we have, then another property that we have. Maybe this one's nicer than this one, and then maybe this one's nicer than the one we have. I don't know. Maybe this one's built in the 90s, this was built in the early 2000s, and this was built recently. We can keep jumping people. Boom. We can go, like I said, it's an upward projection. Why? Because we control the neighborhood if we were to do that, and we're operating at scale. That's the difference. But when we talk about stability, because that's what we're talking about here, guys. Stability versus risk. I can control what's happening, and I can have scale in the market, which is stability. Um, Man, this right here just makes so much sense. So look, if you're going to be investing in real estate here, whether you're going to do this with us or you're going to, we'd love to have you. That's why we have Bell Capital. Go to bell-capital.com. You can get started or you can schedule a call. We're here for you. I'm here to help you. Somebody, myself, or somebody on my team can answer any question you have about the investment, your specific situation about it, or you can hit get started and you can go register at the site. You can take a look at the documents, do your own due diligence, reach out to us. We don't have any illusions that you're going to just hit a button and invest $100,000, $200,000, $1 million. You're going to want to talk to a human being. That's what we're doing. But the big picture here is if you can control some of the risk in your investments and you can tie it to some stability, you can make this thing happen. And that's exactly what we're looking to do. So again, if you're going to be investing in real estate, whether you do it with us or you do it by yourself, make sure you keep this in mind. Just take away the risk out of your investing, right? You really need to do that. Take a look at multifamily property that's producing income already and cash flowing. Invest with other people, get partners, get the debt, whatever it is that you're going to do, or invest with somebody like myself who's already handled all that, who's been doing this business for a long time. So you can keep the main thing, which is your business. There's enough drama in your own business, in your own life, that for you to go get two businesses trying to do this, it just don't work. It's just too risky, right? Why guess it? But if you're sitting on money and you want to invest, reach out to us, talk to us, right? Got to be accredited, got to have a good attitude, got to love real estate, got to be a long-term investor and thinking long-term with your growth. But we want to do this. I want to partner with you on the stuff that we're doing. So we are having a call coming up here soon. You can go to bell-capital.com/Zoom, register there. You'll get the link and you can jump on and once you do that, we'll be able to show you the stuff that we're looking at. I just can't show everybody on the internet what we look at. I can after we close them, but you need to see what we're looking at, why we look at it, deals we like, deals we don't like, so you know who your partner is. That's the thing I want to do is be transparent with you, and I set that up for you to be able to do it. But we are having that calls coming up this week, as a matter of fact. So if you want to jump on, bell-capital.com/Zoom, or you can go to bell-capital.com and hit get started, or you can schedule a call with us. We're here for you. But number one thing I want you to take away from this, and you put it in the comments for me. I want you to put it in the comments. What is the thing that you took away from this video about risk and stability? Like, what stood out to you? You know, where did you put yourself most at risk? Not doing it at all or investing in the wrong thing? I would love to see that. And what was, all right. So I'll make sure to reach out to you. So but leave that in the comments. What was the thing that you put yourself at most risk as it relates to investing? Money, didn't matter whether it's a big deal, small deal, a business, whatever that is to you. But put it in the comments. Which one of these things are you guilty of the most? Never doing it or doing it with the wrong thing? All right, so I'm looking forward to talking to you guys. Like this video, share the video, comment on the video, subscribe to the channel, give it a thumbs up, and I'd appreciate any comments that you have, guys. I really want to comment. Oh, and share it. Love to see your shares, man. I appreciate it. I got a gift for you. If you share the video or you leave a comment on the video, I'll go ahead and I'll send you over a digital version for free copy of my book, You Need More Cash Flow. I go over basically the formula that we use, how to put together, how to start using this, how to multiply your money, right? If you're a business owner, how do you do that? If you're a high paid professional, how do you do that? If you're just starting off and you have no money, what do you start doing, right? You need to have a plan, and You Need More Cash Flow book goes over what that plan is, how to create your cash flow freedom fund, how to fund your freedom for the future. All right. So let's get after it, guys. Have a great day today.